Okay, guys, let's get right into the stock market technical analysis. We're going to go ahead and just go through some of the charts, some of the markets, and we'll go ahead and wrap up. So not a whole lot going on today. I mean, there's kind of just more of the same. When I look at the S&P 500 heat map today, you can see kind of the same players, NVIDIA, and, not a lot, but, just semiconductors. There's still that AI trade going on where AI is going to save the world, apparently. Again, I think it's pretty speculative and it's likely run its course, but you never want to short a bubble. That's one method. If there's something that's going to kind of go into a bubble mania parabolic move like these semiconductors have, we really need to wait for kind of good sell signals. We don't want to just short it because it's gone up a bunch, because it can go up more. So we'll just continue to kind of monitor that. When I look at the triple Qs, just not a lot going on today. It's up slightly. It's just kind of continuing to kind of move higher. Now, it has pretty much gone parabolic. So this can continue higher, but it should at some point have a pretty decent reversal. And as fast as these parabolic moves go up, they usually come down just as fast. So there's just not enough in the charts to tell me to short it again right now. So I need to see a little bit more. One thing that's kind of interesting, so if I go through the Fang stocks, here's Apple, key level that I have if I roll out on this daily chart. The former intraday high back in August of 2022, right there, is right about 176.22. And you can see we're just slightly above that now. It kind of gapped up and we're just above it now. So we'll see where we close. A one-day close above that former level doesn't necessarily mean that that this isn't going to hold as the high, but yeah, I mean, ideally you'd want to see, you kind of want to see the daily close stay around that level, about 176.50 or so. So we're only $1 away from there. We'll see how the market closes, whether they step in and buy it or sell it off, and we close right around that level to end the day. Besides that, I don't see much of a difference or change in these Fang stocks. They're still kind of grinding higher. There's just no technical change in the uptrend. Negative divergence remains on most of them, if not all of them, but most of them. You can see here, Google it burned through a while ago. Apple still had that negative divergence there. Meta still have that negative divergence. Microsoft kind of started to, it's still there actually. We still have negative divergence, barely holding on to it in the PPO. RSI slightly burned through. So yeah, just not a lot of change today. One thing that's interesting, when I look at the semiconductors, here's AVGO. So this thing was up 7% again today. I mean, this has literally just gone parabolic. It's just a mania basically. So these moves don't end well, all right? If you're not in this move, if you didn't, if you weren't long down here, which I obviously was not, but if you weren't, now's not the time to jump on board, okay? From my perspective, I mean, it can go higher. You might get lucky and catch a continued move to the upside, but it's a game of hot potato right now. So, and the other thing that I'm noticing today, big reversal candle. All right, it rallied up this morning and the sellers stepped in and sold it down. This is a shooting star doji right now, big long tail. So that tells me that there's likely going to be more downside and this move is over, at least in this stock. And then the king of these semis, NVIDIA, kind of where it all started. You also have a shooting star doji. The tail's not as big. Usually you want to see a big long tail. The tail's not quite as big, so that might not play out to be a complete shooting star doji, but as of right now, that is one. So we'll look for continued downside from here to help confirm that as a topping candlestick. If you don't see more downside and we just continue higher, then that's not a topping candlestick. So not enough to go off of yet, but likely, this thing has just gone pretty much parabolic. If you look at the daily, you look at the weekly here, you can see it's basically just broken out and so far holding new highs. So it can go higher for sure. We'll keep an eye on. Okay, trade idea I pointed out last week. MasterCard and Visa both look relatively weak, you've got an uptrend line right here to watch. Okay, we have big negative divergence. It's been building for quite a while now on both momentum indicators. And you had a sell signal. Looks like they came in for a back test today, getting rejected right off that trend line. Boom, down 1%, almost 2% there. So I'd look for more downside on that one. They could, maybe they're going to chop it around sideways for a little while. That's completely possible. But in general, it looks like we should have some more downside because this one's on a sell signal. And then if I look at Visa, same kind of look here. Uptrend line right there. Broke trend here. All right, you gap down. Came in for a back test. Let me clean this up. Came in for a back test there and it's getting sold down into today. So this one I think looks good for a move down to the 200-day moving average at a minimum and probably quite a bit more, but you're likely going to get a bounce off that 200-day simple average. That's another, from where we're at right now, about 3.5% down, more downside. And then AXP, which is American Express. Now this is more of the high-end consumer. No real weakness here. All right, I'm not seeing that breaking trend or anything. You're holding support here on the daily chart and just still holding that support right there. So no sell signal on that, but the MasterCard and the Visa are more of kind of the middle of the road consumer, the everyday man. And if you're going to see a break of that, that's really is the consumer. That could start to signal weakness in consumer spending. Consumer spending makes up 70% of GDP, so that could have an impact there. Okay, that's pretty much that. Let's look at gold, really the gold miners. Again, I think there's limited downside now. You've got support right here on this trend line, and we're just about there. Now, yes, I think it could dip down and hit the 200. I don't know if it will, but it's basically a zone of support anywhere from this trend line down to the 200 is kind of the range of support. So if you do run down and hit the 200, I think you snap back and recover that trend line. So that might be a buying opportunity. On this one, I don't see enough quite yet. I mean, it does make sense to maybe start nibbling on this one for a long trade to the upside. But again, there is still potential for a little more downside there. It's really hard to catch the complete bottom, obviously, so that's why you want to potentially nibble. On the hourly chart on this one, you've got bullish divergence here on the PPO. And, it's there on the RSI. It's not fully confirmed, but it definitely is there. So, again, I think there's likely just a little more downside. And then that would kind of start to be the perfect entry, but we don't always get the perfect entry. We're close to support where the buyers are potentially going to start to step in. So that's what I see on GDX, and I would be looking for the next move higher kind of in this uptrend. All right, gold is in an uptrend right now. These miners are in an uptrend, so I'd be looking for that next move higher in that uptrend. We'll take a look at wheat, down about 3.5% today. Again, wheat continues to work its way lower within a bullish falling wedge. So there's your wedge on wheat, and you can see it can continue to kind of grind lower. All right, within the wedge, you're getting close to the apex of the wedge. Usually you don't make it all the way to the complete apex of the wedge before this makes a decision. The big bullish divergence is telling me it's very likely, and the probability is to break to the upside. Okay, no guarantees, but of course that's what the chart tells us. And so again, we're just continuing to kind of work our way within this wedge. All right, so until that kind of breaks out, more of the same. All right, and I still like it as a long trade. I'll like it even more if or when we start to break to the upside out of this wedge. And XHB continues to be one of my sectors I'm looking to short when I get a sell signal. No sell signal right now, but you have negative divergence on the RSI and the PPO. You have a bearish rising wedge. Again, we had the same setup in triple Qs. All right, we had the negative divergence, we had the bearish rising wedge. They broke it to the upside. So that's always possible. Sometimes you get these kind of overshoots and then it reverses. So it just clears out all the stops, all the short interest, then it reverses and you get that big, large move to the downside. So don't, again, I can't say whether we're going to get that or not. It's really hard to judge whether you get that. But if you get that, then you look for the reversal and usually you do start that next leg lower. But as of right now, working our way up higher within a bearish rising wedge with the negative divergence. So looking for the breakdown. And then when I go to some individual ones like DHI, you can see negative divergence on the momentum, continuing to work our way within this bearish rising wedge. And we just need a sell signal. We just need a break of the trend line support. We don't have that yet. So that's kind of how these home builders are looking right now. And just to kind of roll back to the triple Qs, obviously triple Qs is up 0.6%. But if you go to the equal weighted triple Qs, which puts an equal weighting in all of the NASDAQ 100, you are basically flat, okay? And then if I go to the SPY, the S&P 500, which is still heavily weighted towards those tech stocks, you can see that's up. Well, it's basically flat. And then if I go to the equal weighted S&P 500, which means all 500 stocks in the S&P are in equal weight, kind of a more true gauge of the actual market, really. If you remove the weighting, you can see it's actually down, and we're continuing to move lower in the broad market minus the weighting. So more that means more stocks are down than they are up. Just the ones that are up are heavily weighted in the indexes. So it kind of skews the index and kind of skews what's really going on in the market. We'll continue to watch it. Today's pretty much a flat day. There's not a whole lot going on. And not a lot of action to really take. So I'll get the video out, get you guys the update, and we will wrap up. Catch you tomorrow. Bye.